Thanks, Phil, and thanks, Penny, for joining us. So yeah, the QBCC MFR, it's been in existence for more than 20 years now, but more recently we've had the annual reporting come back into play. So that's created quite a few difficulties with the existing licensees and people that have been licensed for some time. So the MFR stands for Minimum Financial Requirements. So it is essentially a series of tests that QBCC use to determine the financial health of a license holder. And the reason it's in play is to protect really tradies from builders that are operating without sufficient capital behind them, and in fact anyone that has a license not having sufficient capital behind them, and then other people that are contracting with that licensee then not subsequently being paid. It's pretty much that simple. So, and it was also put in play, of course, to protect consumers. So people that are engaging with builders or sub-trades to make sure that whatever money that they paid, they got the service or good for which they were paid. I'll just go over to the next bit, which is the tests. So the actual tests for MFR, Minimum Financial Requirements, are actually quite basic. The devil's in the detail, but as a licensee, it's pretty handy to know the basics. You don't need to know the detail. You employ people like myself to figure out the detail, but the basics are actually very, very straightforward. So there's three real tests. It's maximum allowable turnover. So I won't use the acronyms today. I'll say everything as it is. So maximum allowable turnover, and what determines maximum allowable turnover is your net tangible assets. So essentially your assets minus your liabilities gives you your net tangible assets. And rule of thumb for those that like nice simple test, it's 5%. So if you want to turn over $1 million, call it 50,000. If you want to turn over 2 million, call it 100,000. Now it's in the lower numbers, it's actually a little bit more, but it's like 5 point something. In the higher numbers, it's less, it's 4 point something. So at, for example, $2 million, you need $106,000 in net tangible assets. Assets minus liabilities, net tangible assets. Now, the tangible part is things that you can't see and touch, they are taken out. So, for example, goodwill, borrowing costs are ignored. So the third and final test is a liquidity test. It's a test to see whether or not you can pay your short-term liabilities. So that's called the current ratio, and it needs to be 1.0 or better. So how did you work that out? It's simply the current assets have got to be greater than your current liabilities. And so current assets are typically cash and cash equivalents. So cash, accounts receivable, stock, they're all called current assets. They're quite liquid. And current liabilities are liabilities that you must pay in the next 12 months. So they typically include trade creditors, GST, credit cards, and anything else that you owe to the tax office. So that the current assets have got to be greater than your current liabilities. So the tests themselves are actually, like I say before, quite straightforward. The devil starts when you get into the detail of that. And like I said before, it's not something that as a licensee you need to really concern yourself with. As a licensee, you just really need to know that if I want to turn over, whatever I want to turn over, I need 5%. So it's pretty much that simple. There's a bunch of categories, SC1 and 2. So the S and the C stand for self-certified. So you're certifying that you have sufficient net tangible assets for that license category. Now, these SC1 and 2 have the most amount of licensees under QBCC. I think it's something like 45,000 of all licensees are SC1 and SC2. So a 1 and a 2 They can turn over between 200 and 800,000 respectively. They require, you'll see on this little table here, net tangible assets for an SC1, you just need $12,000 in net tangible assets. An SC2, $46,000. Current ratio, as I said before, 1.0 or better. So current assets are going to be greater than current liabilities. Annual reporting for an SC1 and SC2 is really straightforward. You don't have to supply the QBCC with any documents. You do have to supply them with those basic numbers that I said before, which is your maximum allowable turnover. And they want to ask you your current assets, current liabilities, total assets, total liabilities, because they're trying to figure out those three tests. You can report by paper, or you can report via the QBCC portal online, and you must report by the 31st of the 3rd every year. And so we're coming up to that. And I think there was a whole bunch of SC1s and 2s that were suspended and then subsequently cancelled for not reporting last year. They did give them plenty of opportunity to report. I think there might have been something like 500 were cancelled eventually. But like I say, they did give them plenty of time. There has already been a couple of reminders for the SC1s and 2s that the reporting date is coming up. So if you're in that boat, like I say, it's the 31st of the 3rd. The license categories, category 1, 2, 3 and above, it goes to category 7. You'll see there, it's no longer a fixed net tangible asset amount and a fixed maximum allowable turnover amount. It's a sliding scale. So if you want to turn over 800,000, you need $46,000. If you want to turn over 3 million, you need 156. And then it's a straight line between those two. So as I said before, if you want to turn over 2 million, you need 106. And so every dollar of net tangible assets gives you a little bit more of maximum allowable turnover, about 5% for that rule of thumb. Same category 2s and 3s. The numbers just get bigger. The tests are identical. The current ratio test is identical, etc. When you do your annual reporting for an SC1 or an SC2, for a category 1, 2, 3 and above, you will need to upload your documents to the QBCC. They include your financial statements and cash flow, your accounts payable and accounts receivable. And there's a few more questions. They have to be lodged by the 31st of December. So they are working their way through those that haven't lodged. Most of them would either be suspended or conditioned at the moment. And there's a bunch of audits and so on that have come out as a result. They do, of course, look at the category 1s, 2, 3 and above as more risky to the community, because if those licensees fall over, obviously they're going to cause a little bit more pain. So they are considered higher risk, of course, than somebody who is just an SC1. So that is relatively straightforward. As I said, MFR, we'll move on to that. When is an MFR, a minimum financial requirements report? When is that necessary? So they're mandatory in a bunch of scenarios, not your annual reporting. You can report your annual reporting, and most people do, with just your management accounts, or you can use your financial statements that your accountant produced at the end of the financial year. So the SC1s and 2s and Cat 1, 2, 3, etc. use the same balance date, which is 30 June each year to report. The MFR is not used for annual reporting, as I said, but it would be used if you want to lift your maximum allowable turnover. Not from a SC1 to 2, you just sign a declaration. The S and the C, as I said before, stand for self-certified, so you do not need an accountant to help you with that. You can lift from a SC1 to an SC2 without an accountant's assistance. But if you want to lift from an SC2 to a category 1, and given that inflation, the cost of materials, etc., has just exploded, then a lot of people need to increase their maximum allowable turnover. So they will need to fill out or have filled out an MFR, a minimum financial requirements report. This needs to be done by a qualified accountant. who is not currently banned by QBCC. So that'll be typically a CPA or a CA would sign off on your MFR. And in addition to it being produced by a qualified accountant, it also now needs, since the 1st of July, unfortunately, the 1st of July last year, it needs to be done in what's called a general purpose financial statements. And they are typically done by auditors. They're normally outside of the skill set of your garden variety tax accountant. And so unfortunately for license holders, this has significantly increased the cost of an MFR. Now, there's a whole bunch of people advocating for the removal of general purpose financial statements, in which case, when it's done, then the cost of these things will come down and the complexity will come down. And I'm reasonably confident that the QBCC will listen and remove GPFS, general purpose financial statements. The requirement to do an MFR, as I said before, if you want to upgrade to a category 1 and above, you'll need to do an MFR. If you fail your annual lodgement, whether you're an SC2 or a category 1 and above, you will be required to lodge an MFR. So they'll audit you, essentially. They'll send you a notice. The process upon which they go through that is quite, it's set in stone. They will send you a notice requesting that you've completed an MFR, and you've got 21 days. If you fail to do that within 21 days, they'll then give you another opportunity by issuing a notice of proposed suspension, and you'll get another 21 days. So you've got a fair bit of time to lodge these things if you do find yourself in such a situation. In change of directors, you are supposed to lodge an MFR. I understand there's a bit of discretion at QBCC for change of directors. I have noticed people that have come to us that have changed directors, hadn't lodged an MFR and haven't been chased by the QBCC. So I'm not sure to what extent that they enforce that, but certainly the QBCC MFR regulations do say that if you have a change of directors, you do have to lodge a new MFR. And the last one there is as a part of an audit or even at QBCC's discretion. So if you want to trigger an audit, the quickest way to do that is to lodge an annual report that doesn't comply. The second quickest way to do it is to get a whole bunch of monies complaints. So for those that aren't aware, if you are a license holder and you don't pay either a subcontractor of a service provider, that service provider or subcontractor is entitled to lodge a monies complaint. It's a form that they use that you can download off QBCC's website and lodge it with QBCC, and they'll chase the builder or contractor on your behalf, or at least investigate. If you get a bunch of them, it's usually a fairly good indicator that you're in strife, and they will often begin an MFR audit. I hear, I don't know how true it is, that 4 monies complaints will get you an audit, but I don't know if that's if it's 2 or 3, but I have heard 4. So some scenarios here, and I think we're going to bring Penny in again soon. So typical scenarios where we see somebody get a MFR audit was when they lodge their annual report and the MFR fails. Now, because inflation has taken off, as I said before, and demand for goods and services has been out of control, then many people have been exceeding their maximum allowable turnover by more than 10%. They do give you a 10% leeway. So if you're at 800, you can go to 880. If you're obviously at 2 million, you can go to 2.2. But if you exceed by 10%, you could trigger an MFR. Not always. I have noticed as well that some people, they just wave them through. They must consider them to be at low risk. But if you do breach that by 10%, you could trigger an MFR, and you will need to do an uplift of your license by lodging the MFR report. It's not an easy thing to produce these MFRs. So, really, once somebody comes to us, the first thing that we've got to do is try and figure out whether or not they pass. And if they don't pass, then we have to figure out how we can make them pass. And so there's a whole bunch of things that you can do to fix your business so that it passes minimum financial requirements. So, for example, you might be owed money by your company. So there's a debt there from the company to you, or you can do a debt equity swap, or in other words, you can forego what is owed to you in exchange for shares in your own company. That will reduce your liabilities and increase your net assets. So that's one of the things. There's lots of other things that you can do. You can inject assets, whether they be cash or other assets. A classic one that we see all the time is the non-building and construction specialist accountants will write off assets because they're allowed to for tax reasons with instant asset write-off. But because that licensee holds the QBCC licensee needs to meet minimum financial requirements, it can often break the license. But the tax accountant's not aware of or not that familiar with QBCC and takes those assets off the balance sheet. Whereas what they should do is leave the assets on the balance sheet and do an adjustment in the tax return to get that tax deduction as an instant asset write-off, but leave the asset on the balance sheet and depreciate it as normal. Now, you can fix that under the QBCC regulations, the MFR regulations. You can do an asset revaluation and bring those assets back onto the balance sheet at their current asset value. So there are lots of little things that we can do to fix somebody's broken MFR. And when you do this sort of stuff all the time, they become sort of second nature, if you like. So some people come in a panic and we can quickly fix them with a couple of little things like I've just gone through before. But it is. I might
just jump in there, Mick, because I know this is this particular scenario you're talking through here is, I understand, something that Penny comes across quite a bit in terms of the market being quite hot at the moment, and so revenues have gone up, and therefore members are not passing after their annual lodgement. So is that sort of what you're seeing out there, Pen?
Yes. Yeah, that's correct. We receive probably a couple of calls a week from members just in relation to MFR queries or concerns. So they might be wanting to change their category. So they might be in category 1 and they're wanting to drop down to SC2. And they don't meet the minimum financial requirements as their turnover isn't more than the 800,000, and so they're unable to sort of change their category. As the company trade is through a trust structure, so we're seeing a lot of people that have trust structures, and therefore the trust has a negative net tangible position. And so some members, I suppose, they receive correspondence from QBCC and regarding their situation, and some people don't want to acknowledge it. Some people feel quite overwhelmed by it, similar to what Mick was talking about before, and some kind of bury it in the sand and hope that it all goes away. So I suppose the first piece of advice would be to obviously don't bury your head in the sand, reach out, call us, give Master Plumbers a call and talk through the situation that you're in and the correspondence that you've received. We can talk to QBCC on your behalf with your permission. And obviously we can work very closely with Xact Accounting as well to assist you with these questions that you may have. We have seen sometimes QBCC impose some conditions on licensees if their annual reporting hasn't been submitted as well. And usually they will be lifted after they've actually completed those annual reports. Alternatively, we've also seen members where they've let their annual financial turnover, where it's increased, similar to before what you were saying about, the prices and things going up and products into a higher category. So for example, they might be in an SC1 category and they really should be in the SC1, and they really need to be in a category 1. And QBCC has identified this with them when they've looked at their financials, when they've lodged it. And this obviously triggers an audit from QBCC, which is similar to what Mick talked about before, those triggers that actually indicate when an audit is going to come, whether that's through a money's owed complaint or just by submitting the financials and then not having enough net tangible assets. QBCC does provide some reasons as to why. So it might be that they don't have, that they have a deficient current ratio, and that they have a negative net tangible asset position as well. Sometimes members get a show cause notice because they are failing to meet their minimum financial requirements and they're really unsure what to do. So I know, Mick, you just talked about some of the things that could be done in terms of revaluing assets and so forth. Are there any other steps or anything else that people can be doing, especially in regards to the trust structure?
Yeah, well, the first thing you can do with trusts is not use them in the first place. And again, I think it's just accountants that are unfamiliar with QBCC MFR regulations tend to want to use a discretionary trust to trade in, which could be fine under other circumstances, just not with a QBCC regulations. However, having said that, you can trade with a trust and they're actually relatively easy to fix when they break. You just need to monitor them so they don't break, because they don't have net tangible assets. Typically, a trading trust has $10 in settled sum, and so you only need, whether you need a debtor that's more than 180 days, or borrowing costs, or goodwill. Any of those three things will break a basic discretionary trust, but you can fix that really, really easily and really cheaply with a deed of gift. So you essentially are capitalizing the trust or increasing the technical word is increasing the corpus of the trust, but essentially you're just dropping a bit of money into it to fix it. So they're really easy to fix trust, but they're really easy to break, and that's why they're not used. And the other reason they're not used is you need to do a deed of covenant. So you need to pledge your own assets in order to get the license in the first place with a trust. In the past, these trusts years ago they seem to have issued licensees a license without a deed of covenant, but certainly not anymore. If you've got a trust, there are other little tricks with trust that you can do. I probably won't go into that at the moment, Pen, but there's because it does get a little bit technical, and I don't want to send everyone to sleep. But there are a few other little tricks that you can do to fix a trust. But again, if you are thinking of setting up a new trading entity, don't use a trust. If you need a QBCC license, is probably the best advice I can give everybody.
Yeah, that's some really good points. I think because a lot of the times the businesses have been set up years ago with the trust structure, so it's difficult or it's complex, I suppose, for them to exit out. But it's great that there's tips and tricks available to be able to assist them through that.
There's a very easy way to fix it, Pen. Very easy and very cheap.
Yeah. So I think there are a few of the scenarios that we regularly see, and there's this real challenging point, I think, for licensees where they have to cross the gap between SC2 and Category 1. And because, again, we've seen quite a lot of activity in the market and revenues going up. People have been, breaching their maximum allowable turnover and then needing to move into Category 1. And like Mick mentioned earlier, that's just, to upgrade your license that way, you need an MFR report. So that's an instant trigger. And then, as he mentioned as well, this switch across now as well to general purpose financial statements, which ordinarily are prepared by an auditor, of that sort of standard. That's placed an additional kind of burden on people, both financially in terms of time as well. I know there's some consultation going on at the moment within the industry and with the government around that requirement of general purpose financial statements. It was an unintended consequence, we think. It was a change in the accounting standards, the Australian accounting standards, that had a knock-on impact to QBCC regulations. And so we think hopefully that requirement for GPFS won't be around forever. and that hopefully, you know, there are steps afoot to make that change, and that will make everyone's life a bit easier in this space. We don't need more administrative burden, that's for sure.
No. I think the best piece of advice I can give everyone though is test before you do your lodgement. You get it tested, get your accountant to test to make sure that it will sail through and not cause any problems, because it's a very, very quick test to do. These 3 tests that I just went through before, your current ratio, your net tangible assets, and how that compares to your maximum allowable turnover. Do your 3 tests and make sure you're going to pass. And if you're not going to pass, well, then consider what steps you're going to take if you do get an audit, and can you subsequently pass it. So if you didn't pass it 30 June last year, that's fine. You might pass now. We'll test it again. So test it back then. Okay, it's broken or it needs to be lifted. If we're going to get audited, can we pass it now? If we can't pass it now, what steps are we going to take in order to make sure it passes? Because at the end of the day, it's your livelihood, it's your license, it's the thing that keeps your business going. It's, you know, if you stay on top of it, it's not to be taken lightly. So you should stay on top of it and be proactive.
Yeah, absolutely. I think the next point there, Mick, was around correspondence, and Penny's already touched on it. Unfortunately, yeah, we get a lot of clients come to us and they're at the very sort of final stages of us being able to help them. And when we talk about, you know, the various restructuring and the like that we need to do to help people pass MFR, ordinarily, it really is a case of those assets being available, the party in question being able to get into a position where they will pass MFR. It's just that the approach that they've taken so far, either themselves or with their accountant trying to work this through, has meant that QBCC see things in a different light. And so it's not that they're genuinely, you know, not trading well or not in a position to pass MFR. It's more that the way that they've structured things according to the regulations mean that they're failing. So it's more, so if you do receive notices of any sort from QBCC, Penny said very well, don't put your head in the sand. It's really important that you act on it, and that you act on it as soon as you can. They're really getting quite efficient over at QBCC in terms of the way they reach out to people who have either failed to lodge or have failed the MFR tests. And so they're going to keep coming. So we really need people to make sure that they act on any correspondence they receive, so that they can really sort of take a more proactive approach. Penny, I'm sure you get people who are pretty well frustrated and actually, you know, in a fairly emotive kind of state by the time they get to you. Yeah,
definitely. They might have received 3 or 4 letters from QBCC, and maybe it's not until that last letter that they actually reach out to us and say, hey, what do I do now? Or it's, you know, the day before that their license is about to be suspended. So I suppose, yeah, the message is, if you get something and you're not sure, please reach out, let us know, and we can work through it with you, because it is very important. It is your livelihood, it is your business, and we want to make sure that you are protected as part of that.
Yeah, absolutely. So Mick, unless you wanted to add anything there, or Penny, we might just open up for some questions. So we're happy for people to put them into the chat if they'd like, and we can handle them from there. Also happy to try, and if you want to put your hand up, we can probably unmute you. I'm having a few little challenges with Zoom today, but we can try and do that as well. So if anyone has any questions they wanted to go through, we can answer those as well now. I'm sure there are a few of our accounting friends on the call as well. We're happy to help other accountants in this space too. So yeah, if there are any other questions, we're happy to take those now. No? Might be because we're recording the call that people are a bit uncomfortable. I'm happy to, we will be going through this and removing any of the sort of personal questions, or if people are uncomfortable with sharing that information publicly. But there is a question there from Peter Stevens around negative WIP. Mick, if you want to talk to WIP and the role it plays in MFR.
I just had to, I finally sneezed, like I'm at home. I've been, had a bit of a cold going on here. So I just muted myself for a bit. Am I back, Bill?
Excellent. You're back, mate.
Yes.
Yeah. Okay, cool. So, sorry, what was the question? Trust structure?
No. The first one is around WIP, negative WIP. And
negative WIP. So negative WIP. Yep, that's a classic. It's essentially a liability. WIP is the definition I use to simplify it is that it's the expenses that you've incurred but haven't been able to bill, plus margin. So it's usually reserved for stage-based billing, whether you're a commercial plumber, you're a builder. It's not something for domestic maintenance plumbers, and it is where essentially negative WIP is where you've billed in advance. So normally WIP is expenses you've incurred but haven't been able to bill because you haven't got to a certain stage. But negative WIP is where you've billed in advance. So, for example, if the deposit you take on a house, construction 5%, that would be negative. If that's the balance, if you took that on the balance date, that's negative WIP. It's no issue. It's no big deal. It is a current liability. It can break people's MFRs when they do have negative WIP, but it's no issue or no big deal. There is a set Excel spreadsheet that people can use to calculate WIP. If anyone wants that, just reach out and I can flick that across.
Okay, thank you. So Mick, there's another one here. So when you talk of trust structure, do you mean Joe Blow Trust trading as ABC Plumbing? So it's just that, arrangement of the license in the trust, etc.
We do. We mean it sort of. I'm just having a look at that one myself. Where'd it go? Oh yeah. Do you mean Joe Blow Trust trading as ABC? Yes. It doesn't read like that though, Lynn. What it would say is ABC Proprietary Limited as trustee for the ABC Trust. Often they're called discretionary trusts or family trusts. And then you may then have a trading name that is different than those two names. But normally it would be ABC Proprietary Limited trading, as trustee for the ABC Trust. That's a trust structure. So that's when you're in a trading trust. Versus often builders or tradies will have ABC Proprietary Limited with the shareholder being the trust. We're not referring to that. That's different again. That's fine. And that's typically how a lot of people are set up.
Yeah, so that's where you have the trust on the side still, and you can still use that as you would ordinarily use a trust. Yeah. But the license is in the company and the assets are in the company.
Yeah.
But the shareholder is the trust is a shareholder of the company. So there's a question here from Dion, an accountant. Welcome, Dion. Appreciate some information on GPFS and how does he go about preparing GPFS or getting someone else to prepare GPFS? Where should we point him?
Point him to us if you like, Dion. We do this for lots of accountants. They're referred to us. Similar sort of situation. We're happy to help. We can do the GPFS and the assurance review, or just the GPFS, but typically we would do the assurance review after that. But yeah, reach out to us, Dion. We're happy to help. We do it for lots of other accountants. Yeah.
Examples of assets that can be transferred over to use as NAT, e.g. vehicles, trucks, etc. And can they be held in a different entity?
No, they can't be held in a different entity if you want to use them for net tangible assets for the licensee. You can, in some circumstances, use a deed of covenant to pledge those assets essentially that's in another entity. But that gets more tricky. That gets a little bit more tricky and more expensive. So you're best to have those assets in the licensed entity. And the sorts of assets are, vehicles, trucks, plant and machinery, all of those, cash, things that can't be used, household furniture, cryptocurrency, boats. Those are the types of things that are out, unfortunately. But certainly,
you forgot jet skis.
Yeah, they're out too, unfortunately. Yes, they're out. And there's plenty of people with those these days. After COVID. But yeah, Mitch, all of those things that you just gave an example of can be used as for your net tangibles, and you can transfer them across. Unfortunately, the registered vehicles you'll have to pay stamp on, but other assets, non-registered plant equipment, you can just transfer across.
Okay, yeah, good question here around, I guess it's about the timing of when you need to upgrade to a category 1. So, you know, your turnover is exceeding 800,000 before the end of financial year. Should you notify QBCC immediately? So what's the sort of timing sequence there, Mick, in terms of, you know, when you know you've gone over your MAT?
Yeah, so you're allowed to go over by 10%. That's no problem. As I said earlier, 800, you can go to 880, 2 million, 2.2. As soon as you go over, you need to, as soon as it becomes obvious that you're going to go over in the current financial year, then you should apply to uplift your license, because you are technically not allowed to go over that 10% buffer unless you have lifted your license.
Okay. A question here around the quick fix for the trust. Cat 1, 2.5 million allowable turnover, operating a PTY LTD as trading family trust. Set up approximately 20 years ago, currently having to sign a covenant. So yeah, what's the way through on that one, Mick?
Well, there's a couple of ways. Jody, I'm just not sure if you're referring to the quick fix if the trust breaks. So if the trust breaks, typically they've got $10 in settled sum when they set them up. If it breaks because you've got so, for example, accounts receivable older than 180 days, you've got intangible assets such as borrowing costs, goodwill, etc. Then the quick fix to fix that for QBCC MFR is a deed of gift. So if you have unpaid present entitlements or loans, is probably a better word to use, but they're technically called unpaid present entitlements, where the beneficiaries are owed money from those trusts, then you can convert that debt into a gift to increase the corpus or the capital of the trust, and that'll fix it. Because often they're only broken by a couple of $1,000s. It's a bit ridiculous, but they break by a couple of $1,000 and have negative net tangible assets because you can't, you're not allowed to allow those accounts receivable. So deed of gift. The other way, a little bit more technical, is you can capitalise the trustee. So the trustee is often a company, as I said before, ABC Proprietary Limited is trustee for the XYZ Trust. Then you can capitalise the company by transferring assets into the trustee company, which will be the licensee, and that will also fix the trust. So you don't actually have to do a deed of covenant that way. You can circumvent the covenant by capitalising the trustee. A little bit more technical, probably needs a whiteboard, that one, I think, Phil.
And a reminder, I guess, as well, that, we're happy to, and we'll show you, we'll have a QR code in a second that you can use to get in touch with us. But yeah, more than happy to kind of work through some of this stuff with people separate to this webinar. Penny, there's a nice hospital pass there for you. The question around, do electricians have to do this? Example, plumbers don't need to do a contract for jobs over 3,300. Why are plumbers lumped in with builders, etc.?
Yes, so an electrician can't carry out building work without a QBCC license. So they are required to submit their minimum financial requirements to QBCC if they hold a contractor's license. In terms of why are we lumped in with the QBCC in relation to the occupational license. So back in 2014, the government at that time transitioned the Plumbing Industry Council, or disbanded the Plumbing Industry Council, out of the department where it used to sit and created what they call a Service Trades Council, which sits as an independent body under the QBCC. So why did it happen? It was the previous government decided to make changes and to streamline it and put everything all in one entity. Because obviously you have your contractor licensing in the QBCC, which has been there, I think, since the 90s. We were talking about that the other day as to how long it's actually been in the QBCC. In terms of members, we understand that a lot of members are unhappy with a number of items at QBCC and that their preference would be to have our own regulatory body back. This week, we'll be sending out a survey to industry to get more feedback around the specifics on that. And then from that, the board will decide around our strategic objectives that we're trying to achieve in relation to QBCC. I will say that we do work very closely with the QBCC now, and I'm very fortunate to be working very closely with them in my role as chair of the Service Trades Council. The QBCC also sent out a survey recently to licensees to get their feedback on issues and problems in the industry. I understand as at today, we've had about 1,500 responses to that survey. So we will be getting an analysis and a review of what the Service Trades Council in conjunction with QBCC can be doing in that space.
Yeah. And so, yeah, because I get the sentiment behind that in terms of, you know, the QBCC there being to protect consumers and other operators in the industry. And as Mick said, you know, like I guess that burden of protection is greater and the risk is greater, the larger the company as well. And so, you know, Cat 1 and above, if there are financial issues with those entities, that will have a knock-on effect, you would think. Just out of interest, Penny, like I'm sure, yeah, off the top of your head, question without notice, how many members do you reckon, or what rough percentage of members do you think are in the SC1, SC2, kind of up to 800,000?
I'd say a large portion of our members are sole operators, or that they might have one apprentice or tradesperson with them. So majority of our members would be in that small, up to sort of 5 employees that they would have. So they'd be across SC1, SC2 and category 1 as well, where our major plumbing contractors are obviously in the higher categories. Yeah.
So, and I guess the burden is probably a little bit lighter for them in terms of being able to, you know, self-certify and not have to deal with MFR reports and the like, you know, or upgrading to higher licenses. Okay, just having a look here. I mean, I think with those questions that are in there, I think you've covered off on most of that already, Penny. Any other questions from the floor?
I think Mitch has got one there for racehorses.
Yeah, whether they can be included in as an asset, I assume, Mitch.
Like with the jet ski.
Unfortunately not, Mitch, no. That's in the same category as helicopters and jet skis and boats. I don't know why. They're such a good asset, but
we've had questions about guard dogs as well previously, Mick. I don't know if they're treated as assets.
No.
Livestock.
No, they're not. Good try.
Yeah, Mitch says, bugger. Yeah, we agree, Mitch. But if it's running well, give us a call, mate. We might take it on. All right. Well, I think unless there are any other questions, thank you very much, Penny, for joining us and for your insights and for fighting the good fight for members there. And Mick, thank you, as always, for your expert knowledge in this space. If you wanted to if you can flick over to that PowerPoint again, because we've got the QR code there for people on the next slide, I think it is. Yeah. So if you do want to talk about any of this stuff, that QR code there will, I'm not sure why we've got a red mark there. Hopefully that works. That QR code will get you to our resources page and will allow people to access. We've got some discounts on our QBCC work for Master Plumbers members. And we've got a whole lot of different sort of tools and calculators and things there as well, specifically for the building industry. Mick mentioned the work in progress calculator. You'll be able to access that there, and other webinars that we've produced as well. So if you need any further help, just reach out to us. Again, if you are having troubles with MFR, you can talk to us. If your accountant's struggling, happy to help out, give back to the universe, and hopefully the universe gives back to us at some point down the track. Thank you again, everyone, for joining. Sorry about the tech issues, and hopefully we'll see you all again down the track at some point.
Thanks, Phil. Thanks,
Thank
Penny.
you.
Thanks,
Thank
guys.
you.
Thank you. See you, everyone.
Bye.